and we have the Fed minutes on Wednesday of this week. I warned you in last weekend's video that I had a note in my calendar about a seasonal event that often happens in August, where we see a rally going on the first couple of weeks of August, only to see us hit a wall and either sit sideways or pull back going into the end of week 3, and maybe continuing on the rest of the month until we get to September 1st. And I think a lot of this is a lot of the reason why we saw such a strong rally going on the last 6 weeks or so is, just an attempt to get the market as high as possible for a little pullback, and then that little pullback is going to be a great buying opportunity to launch us through September and into Q3 starting the following month. Let's start off looking at our 5-minute chart and the activity going on Thursday and Friday. Now, I wasn't around on Friday. I didn't get a chance to call this for you, but I was here on Thursday. We saw a rally on Wednesday after the CPI data. We saw another gap up open on Thursday after the PPI data, and we topped off at about 42.60 using our 80 handle rule, pushing our way through 4200, 4250, topped off at 42.60 and saw a pullback happen, taking us down to 42.01 for a low of day on Thursday, where we towed the line there. And if you got long once again, using your 80 handle rule, topping off at 42.60, pulling all the way back to 4200, holding at 42.01, you got a gap up open on Friday. And even if you just waited for Friday, you saw the gap up open above the 2022 halfway back, sideways consolidation here up until about 11:15, 11:30 Eastern time, or even actually just 11 o'clock Eastern time. And then the rally began that takes us all the way to 42.80. Closing right off of the high of the day, closing the week out at 42.80. So this, to my mind, opens the door for us to continue on and finish filling this big gap overhead that takes us back through the May 5th high into the May 4th close. It was a Fed day. We're heading into Fed minutes from our last meeting now. This sort of all lines up in my mind that we're going to take this move to 4,300, maybe look above it to the 200-day simple moving average, and then rest and see what the market wants to do from there. Looking at a couple of options that I recommended this week. Earlier in the week on Tuesday, before the CPI data, I offered to you these 4,200 Friday expiration calls. These took you all the way to $60 on Thursday after the PPI data, and then in that move down to 4,200, 42.01 at the low of the day, near the end of the day, these pulled back all the way to about $17 to $18. From there, they took off and went to $80 just about. On Friday, of course, they were the 4,200, so if we went to 42.80, these naturally go to $80. They settled at $80. People were pulling money off the table clearly here, but if you just held them into settlement, you got $80.12 for those, because that's where we closed on Friday. I'm sure nobody played these at all, but if you were following my advice, you played these and you took the money off the table here on that move up on Thursday. And then you looked for an entry into the Monday expiration 42.75s. And if you took those, you see that towards the end of the day on Thursday, they broke down below $5. So you hopefully did not get into those. You waited for Friday, you waited for them to stabilize at the $5 window, and from there they went on to $19 into the close on Friday. And if we're going to go to 4,300 on Monday, these of course are going to be $25 plus premium, and if we rise over 4,300, then they're going to be 25 plus whatever that rise over 4,300 is. So that's your next play. Hopefully you're in those. If not, then maybe there'll be another entry into something on Monday. We'll go over that at the end of the video. Looking at our roadmap, you can see with this high, we poked our head into this gap that takes us to 4,300, and above that gap would be the 200-day simple moving average. Looking over to the left side of the chart, you can see there was a huge consolidation point at that area that would take us just above the 200-day simple moving average, followed by a gap down open that happened back here in April. So that would be, where I think we could hit if we make it through 4,300 and to the 200-day simple moving average. I would see us sitting sideways here, consolidating, and maybe kind of falling off the shelf and pulling back. If I'm wrong about us getting a pullback, then we're just going to consolidate sideways for a while, chopping back and forth above below the 200-day, just as we did here at the 100-day simple moving average at the end of July and the beginning of August. But if we do pull back, we have our 10-day, our 100-day, And if we cannot hold our 100-day, then we lose this support that brought us in here at the beginning of the month. And we fall back down through the 20-day and finally to the 50-day. I don't see us falling much further than the 50-day simple moving average. At most, maybe we would take a look below that. Maybe look at the June halfway back at most. But I don't really see us pulling back any further than this area here. And from here, I think this would be an awesome buying opportunity to get us into that rally that should begin the first week of September. When we look at our simplified daily chart, we can see that once we do finally break out above our 200-day simple moving average, consolidate here, maybe as we get into September and into October, our target's going to be the median line of this gigantic new bull fork that we have with its third plotting point here at the June low. To get to this median line of the bull fork, we would get all the way up into the 4600s. Above that, we have a gap to fill at the January 14th close. Above that, we would have the 2021 close to get us positive on the year once again, and then going after the all-time high that was set in that first week of trading this year. And that is either going to get us, we're either going to get there from a consolidation just above the 200-day, or maybe a pullback to the 50-day, consolidate there, and then launch up to this point. Looking at a great tell in our side view mirror, Apple, you can see that it broke out over its 200-day simple moving average. It only needed to consolidate for about a week, and it has taken off from there. So if we are going to pull back on the S&P 500, we're looking to see if Apple pulls back and holds its 200-day simple moving average. Maybe in turn we will just hold our 100-day moving average on the S&P, because that was what was going on in the S&P around the time Apple was taking out its 200-day. But if Apple falls below its 200-day, then it's going to go to the 50-day, and so will the S&P 500. So Apple's going to be a great tell for you in the side view mirror. And looking out into the future for Apple, it has the top of its bull fork, a measured move target as well, up at 186, and right now it's trading at 177. So it's trying to go for its 80 handle roll, trying to get to 180, and then beyond that it'll be moving its way towards 200. If the S&P 500 is going to go to 4,600 and then on to a new all-time high, Apple's going to go to 200. All of this is going to be, telling towards each other, helping you out. Let's take a look at the Monday expiration calls. The second highest volume. Oh, I'm sorry. These are the Friday puts. Oh, hopefully Thinkorswim doesn't mess me up here. Anyway, I can just tell you while we're waiting on this screen to move for me. Okay, here we go. Up on the Monday calls, the volume leader are the 4300s. They were about $7 as we went out on Friday. If we're going to gap up open on Monday, these should hold an $8 window. If we're going to open flat to slightly down, we're watching for these 4300s to hold $5. That might be your entry point. Second highest volume are these 4275s. If you took this trade, you want to watch and make sure you don't really see much of a pullback in these. You want to, hold as much of your profits as you can. If you got in at the $5 window, I would say don't let these slip below $15. You want to keep your triple on that, 15, 16 bucks. If they do, then these are probably going to slip back as well. And we'll know that this second highest volume here in these 4275s probably were sellers that intend on sort of blocking the way at that 4280 mark, that high on Friday, and not intending for us to advance on Monday. Might come back on Tuesday and top off that rally and get to 4,300 then. But if we see resistance at that 4280 level on Monday, it is sellers sitting here in these 4275s. If we push right through it, then like I said, these 4300s are going to regain $8 and hold it, and that's going to be your entry and your play for a same-day expiration move on Monday. Now, I was looking at these. I had these Friday end-of-day expirations pulled up on the screen for you because we want to be looking to the put side for these. Thinking that by Wednesday we might hit a wall of resistance, waiting on those Fed minutes, and maybe something in those Fed minutes is going to be an excuse for this market to take profits and start making that move down towards the 50-day simple moving average. But that's a move that's going to take a couple of weeks to happen. So you want to make sure that you are in as high of an expiration of puts as you can possibly be. Looking at these 4,200 expiration puts, this is Friday end of day, not the monthly ones. These were holding the $11 window on the way out the door Friday. So at 4180, these 4,200 puts, I'm sorry, at 4280 for the S&P, these 4,200 puts were holding the $11 window. if we come in on Monday and these are still holding the $11 window, we know that we're seeing the process of a pullback start. I don't necessarily think that that we're not going to come back on Tuesday and rally again. I think we probably would. So just be careful, protect your profits, maybe put a little hedge on against these, or get out of them and get back into them end of the day Tuesday ahead of those Fed minutes, or even Wednesday morning. But we want to be looking at the 4,200 strike. We really don't want to go any lower than the 4,150 if we can help it. And if we do continue to rally on Monday, let's look and see where these 42.25s and even these 42.50s go as we rally up a little further to 4,300, maybe even to the 50-day, the 200-day simple moving average on the S&P. Because if you can get in at 4,200 or even a higher strike than that, you're going to make a lot more money on these for an end of the week pullback that kind of starts us off for a couple of weeks of selling. And once you make some money on these puts, you take those profits and you look at next week's expiration, rolling some of your profits into those. Okay, hope this video all makes sense. Hope it gives you a good leg up for Monday and next week. Have a great rest of your Sunday, and as always, good luck and good trading.